The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everyone. This is Jacob. Today we got Kevin Hincks, we got Teddy Keckstad. I'll be filling in for Tommy today. Let's take a look at what we got. We have everything basically moving sideways. DIA, the Qs, GDX, the dollar's moving sideways. Had a pop down there, but we are going to see what shakes out today at open. One of the guys I really want to focus on today is Zoom. With a lot of the tech companies, with raising rates, we've seen a lot of layoffs. Let's see what we can get going on over here. You can see a massive pop-up on this announcement. Let's see. With huge volume going up as well. So the market obviously loved this kind of news. It's important to know that even though the tech companies are having large layoffs, the amount that are left employee-wise are still higher than what we've been in recent years. So this is kind of just a restructuring of the company. Let's move over here. So Zoom on Tuesday announces a plan to cut about 1,300 workers, or 15% of its workforce, according to a blog post shared by the company's website. Shares of Zoom closed up 9.8%. CEO Eric Yuan wrote in the blog post that as the world continues to adjust to life after the pandemic, the company needs to adapt to the uncertainty, quote, uncertainty of the global economy, as well as its effect on our customers. Zoom experienced a huge boom during the pandemic when people were forced to work from home and turn into video chat software to stay in touch with colleagues. It still blows my mind just how successful Zoom was. In my opinion, I had seen there were a lot of better options. You know, one, we use Discord. Discord obviously has a downside. They have to create an account, where Zoom doesn't really always require you to do that with meetings. But, you know, it seems like it really still has its staying power in the market. Yuan said, "We worked tirelessly and made Zoom better for our customers and users, but we also made mistakes. We didn't take as much time as we should have to thoroughly analyze our teams or assess if we were growing sustainably and toward our highest priorities." Again, you know, during this insane run-up we've had, it probably made sense to add as many people as you could. This is just a very normal restructuring of companies. We even see Meta doing this. We see Google doing this. Again, this is just kind of the nature of this current market. Yuan said the cuts will impact every organization across Zoom, and employees will be offered up to 16 weeks of salary and healthcare coverage. Yuan also said he plans to reduce his own salary for the coming fiscal year by 98%. He is also foregoing 2023 corporate bonuses. Quote, "As the CEO and founder of Zoom, I am accountable for these mistakes and the actions we take today, and I want to show accountability not just in words, but in my own actions." So it'll be interesting to see, you know, when financials come out for Zoom. I don't know if Yuan is being a little bit, you know, humble in a sense, I suppose. But again, this is very natural for what's going on. Meta is also going through a flattening. I think some of the investor calls that Zuckerberg was a part of, you know, with this heavy emphasis on things like the metaverse, you're getting a lot of talk of just getting back to basics of what Facebook was for, creating legitimate products and doing advertisements. And so he seemed to have serioused up a little bit. So flattening is taking place as well in Meta, and Meta was the one that really kind of carried a lot of the tech guys in the last week. So Meta Platforms is asking many of its managers and directors to transition to individual contributor jobs. Let's see here. Pull up Meta. So again, this kind of like seriousing up, especially with good reports last week, was huge for the company. He says Meta Platforms is asking many of its managers and directors to transition to individual contributor jobs or leave the company as it tries to become more efficient, according to people familiar with the matter. The process is known internally as, quote, flattening. Higher level managers are sharing the directive with their subordinates in the coming weeks, separate from the company's regular performance reviews that are currently underway. Individual contributors are in charge of others and instead focus on tasks like coding, designing, and research. Meta fired 13% of its workforce in November during its first major layoff. In the months since, staff have faced intense anxiety about the potential of future cuts. Meta Chief Executive Officer Mark Zuckerberg explained during the company's earnings report this month that he still felt the organization was too slow-moving and bloated. He called 2023, quote, the year of efficiency, and vowed to cut middle managers in underperforming projects. The current round of job cuts will be more gradual, enacted, and on an individual basis. Some Meta employees said they felt the change was needed, given the organization includes some teams that compete to achieve similar goals and managers that oversee only 1 or 2 employees. Meta has declined to comment, and Zuckerberg's plan for a leaner organization helped the share price recover, which is its worst year ever, and it's up 56% so far this year. So as it stands, I think we're going to see a lot of that, just in everything in life. When times are good, things become bloated, and when times get a little bit rough, you got to cut down on some of the resources. I don't think this is a bad thing overall. I do think you will see a lot more essentially like alacrity in these companies, and they'll be able to address problems perhaps more quickly, especially with the removal of middle management. So Powell's speech, we only got about a minute and a half left until the break, so we can get back to that. Powell's speech triggered record options bets yesterday. Record volume in call options on stocks last week may have also been a sign of medium-term peak in speculative behavior. According to Susquehanna, 40 million call options were traded last Thursday. Stocks continued a 2-day rally that day on Powell's dovish comments made during his Wednesday afternoon press briefing. Options are big market bets, of course, our SPDR, Qs, but also the triple A's popped up on it. And again, I'm not sure if the market knows exactly what it wants to do on there. There's clearly still a lot of money moving around. And, you know, your online guys, such as Wall Street Bets, are still... They still got a lot of energy left in them. It doesn't seem like they want to stop at all. And honestly, the way that I would look at that is a lot of these guys on Wall Street Bets, and yeah, of course, there are some institutional guys maybe on there, but kind of just your average guy. They still have money they want to pop in. They're still extraordinarily risky. Of course, it might just come with the nature of the environment on Wall Street Bets, but it doesn't seem like they're slowing down at all. Guys, we'll be right back. We're going to get Kevin Hincks on live with us, so stay tuned.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
All right, folks. Right now, we're going to go over to our guy, Kevin Hincks, host of Fast Market on TD Ameritrade, streamed every trading day at noon on TFNN. Kevin, how you doing?
I'm good. How are you?
Doing all right. Doing all right. So what do we got going on today?
Well, today, coming off of earnings, and really this time of year, it's all about earnings. And the high-profile earnings coming out today after the close is Disney. So obviously, like Folio, we'll do a presentation on Disney. We'll talk about Disney. We'll trade Disney. We'll also trade PepsiCo, the consumer staple that comes out with earnings. And then we'll look at the casino stocks, Wynn Resorts, MGM Resorts, both coming out with earnings after the bell today. So that is a great kind of proxy, as you know, to look at these names. They've had an incredible run the last few weeks and months. So we'll look at Disney, PepsiCo, and Wynn Resorts today.
Wonderful, wonderful. So, Kevin, let me ask you, we're seeing a lot of these smaller stocks kind of pop up. You know, you had this crazy run with Bed Bath & Beyond, Carvana, with kind of these ideas with short squeezes. What's your take on that?
I trade those very carefully because it's, massive short interest and companies that are by definition not successful. But you can't, if short interest gets too big in a stock, you are susceptible to a short squeeze. That's what that is. Some traders read when the short interest on a name gets overweighted or too heavy to one side, it makes it vulnerable to a short squeeze. And I think that's what you're seeing in some of these names. And if by chance one of these names were to hang in there and remain and regain profitability, then that short squeeze could get quite violent.
Yeah, no kidding. And again, it is crazy to see the hop on all of that. At least people that I know in my personal life were just hopping onto Carvana and Bed Bath & Beyond.
Sure.
So with, Disney has moved back with Bob Iger. What are you thinking we're seeing with a move forward in the coming months with Disney? Obviously, they had a nice, big sell-off sometime last year. I personally hold Disney. I love holding the stock, and it's done pretty well.
Yeah, well, first and foremost, Disney is a massive company who their streaming business, which what seems to be weighing the stock down right now, is incredibly a high-profile, newsworthy topic right now. But it underscores the strength of parks and cruise lines and all the other things that Disney has.
Right.
This is and I didn't even mention ESPN and how incredibly important that is to Disney. So, if you compare Netflix to Disney, Netflix is clearly the leader in streaming, and they do the best job. But Disney's got almost the size of Netflix within the borders of Disney. Now, they're not profitable yet in terms of their streaming from Disney Plus, but Disney is in it for the long haul. They've got cash that can, hang and support these businesses until they get profitable. So, Disney, they get a lot of headlines right now because of streaming and Disney Plus and the fact that they don't make money yet. But there's so many parts of this company that are massively profitable. So you have to really look at Disney as the whole, even though the sexy thing to do right now is look at streaming and Disney Plus only.
Right. And, coupling with what you're looking at today with Disney and then some of the casino stocks, what's the theory behind these together? Is there one? And I look at this in the sense that, Disney requires disposable income, right? When times are hard, not a lot of people,
sure,
I might be wrong, but not a lot of people maybe spend going to parks. And then the same with casinos. Of course, when times do get rough, I know we can see pop-ups in things like casinos. But is there a general theory? Or are you looking at these stocks as a barometer for a broader kind of market trend? Is there anything there with that?
Well, from the casino stocks, I think casino stocks, because of their exposure to Macau and Singapore and how much percentage of their income comes from there, it's a great China proxy. And I think some of these resorts should be thanking the CEO of Apple, Tim Cook, because I think the pressure that he put on China when he talked about moving iPhone production out of China caused China to reopen. And all that reopening is giving fuel to these names. So now there's that story. Now with Disney, you can make a case that ESPN, is Disney ever going to let ESPN get into the gambling business and betting business like these other small companies are doing? Or do they have to spin them off to do that? So there's that connection that will always be speculation about spinning off ESPN. But in terms of Disney, I think it's the small look at Disney Plus versus the massive look at all of Disney.
Love it. No kidding. I mean, that's if that's a symbol to watch that show today, then there's none other, I don't think. Kevin, thank you so much for joining us again, folks. Host of Fast Market, noon on TFNN. Kevin, we're looking forward to watching today. All right.
Thanks for having me on. Have a great day.
Absolutely. Bye now. All right. So yeah, seriously, Disney's is just a good. I love this stock so much. I was lucky enough to get into it at like March of 2020 at the crash, and rode it all the way to the top, and we're here now. I mean, this is I love it. I love it. I haven't gotten too big into the casino stocks at all, but what Kevin's saying is it being a barometer for the Chinese market itself, in a way, maybe a proxy. I don't want to put words in his mouth at all. Still very interesting. So I'm definitely tuning in for that. Let's see. China is experiencing some interesting bounce back. We got a little bit of time left before the break. But something I found interesting is U.S. is exporting, hitting 5 months highs of their light sweet crude to China. There's also been a reduction, I suppose, of consumption of essentially petrol in the U.S. with the advent and wider dissemination of electric vehicles. It's pretty neat. This is from a few days ago, but U.S. exports of light sweet crude to China jumped to 5-month high as the world's biggest crude importer boosted refining, and as Europe demand eased, the participants say. Cargoes of U.S. light sweet crude bound for China rose last month to about 187,000 barrels per day, the highest since August. So those exports are expected to tighten global supply of light sweet crude, while the prices of WTI Midland, a key U.S. light sweet grade, have strengthened. Quote, China is continuing to pull more light sweet crude, and WTI Midland is moving into Asia in bigger size. It really is interesting. You know, we are kind of getting out of winter in some, you know, in the next few months, that will ease demand by Europe. But regarding the conflict that still exists, you know, right on the doorstep of Western Europe, you know, if this persists, which it doesn't, you know, show any sign of slowing down, we could see another huge push up at the end of this year. Guys, we'll be right back. A little bit later in the show, we got Teddy Keckstadt, so stay tuned for that.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Yeah, so before the break, I was touching a little bit still the conflict going on. Excuse me, in Europe. I'm looking at Lockheed Martin now. Right now, in the way that the kind of world's poised, is these defense stocks are great, value investments, and they are going to have some growth in them as well. In December, Lockheed got a HIMARS contract to replenish stock sent to the Ukraine. This is massive. And, keep in mind, we send this aid in a way, and it needs to be paid back after a certain point. This is huge for Lockheed and Martin. That contract in December was $431 million from the U.S. Army to produce M142 HIMARS, which is high mobility artillery rocket system launchers, at full rate, with the aim of rapidly replenishing the stocks of the U.S. and its allies and partners who sent the arms to Ukraine. On top of that, it seems that the offensive from the east is getting a little bit heavier. And so they're sending HIMARS now to Poland. Again, these are sales. This is massive. Lockheed Martin is not going anywhere, especially at this time. Furthermore, there's been so much talk around, especially with the State of the Union last night. Now, of course, it had more of an economic tone to it, and it's probably always going to for the most part. But, talking about the potential threat that China might pose economically speaking, on February 2nd, the U.S. And Filipino military struck a deal to increase U.S. presence across more of the military bases in the southeast countries. Now, to say that these aren't active zones whatsoever, but what it shows is that there is a ramp up of kind of bolstering of defenses across kind of the geopolitical arena. I think these defense stocks are going to continue to go up. Another thing too, and I don't have a good stock to show for it currently, but it's this concept of cybersecurity. I know we're seeing a very hot war, in Europe. But the real future of all this is kind of going to be economic battles through the medium of cyber conflict. The Biden administration recently said that they're going to try to, or they have started, I don't want to say a task force, but essentially a cabinet for cybersecurity to ramp this up. If these things pass, the amount of cash flow going into cybersecurity, the cybersecurity sector, is going to be absolutely massive. For so long, we've kind of sat here and, our national programs, like within the NSA and more offensive programs than cybersecurity are very good. It brings to mind the situation in Iran a few years back with a virus that shut down some of their nuclear plants. But a lot of the times, especially via like the kind of the enterprise route, we kind of just get hit and we deal with the consequences afterwards. And there's usually not really many at-home consequences for the executives who are overseeing companies that get hit. A lot of times, what results in these massive breaches, like, you think Equifax back a few years ago, you think Target back a few years ago, a lot of times this is kind of due to like lax behavior regarding security, right? And it results in tons of data being lost, people's personal information being compromised, and tens of millions of dollars being lost. So with the Biden administration, them pushing for stronger cybersecurity practices on an enterprise, in a private sector realm, as opposed to just military or political, is going to be massive, and it would be interesting to see that actually play out. Additionally, with that as well, we'll start having, if this passes, how should I say? We'll have more active kind of penetrations into other countries, into other threat actors who are hitting us at an enterprise level, as opposed to just being on the defensive. This could really revolutionize the way that this world kind of operates. It's very important. I think any defense stock right now in the coming years, whether it is something physical like Lockheed Martin or something in the cyber realm, is something super interesting to look at. All right, let's see what else we got. What's the situation in Turkey and Syria? Obviously, we had the earthquake with thousands dead. Very sad thing. The BIST 100, which is their largest trading index, was actually shut down yesterday. You had, I think, a 7% drop very quickly. It triggered a lot of circuit breakers, quote unquote. Is that the Borsa Istanbul Stock Exchange? The BIST 100 was among last year's best performing markets, rising roughly 200% as retail traders sought returns during a severe cost of living crisis. It had begun falling even before this week's earthquake. However, with investors worrying about upcoming elections in May, as well as the government's unorthodox policy of holding interest rates low despite very high inflation, they had to shut it down. That is a strange thing as well, just economic policy speaking. You know, there's been so much talk for years about Erdogan's kind of policies, and he made himself, I think, a few years back in charge of kind of the economic vision. The lira obviously experienced very, very high inflation to a point where a lot of people suffered from it. However, to that note of the 7% decrease, there is one sector that did increase quite a bit in the BIST 100, and that was cement companies, and these surged 21%. There was a newspaper, Yeni Chag, the cement blocks. They're essentially kind of criticizing this surge, but it makes sense. I mean, there's going to be a massive rebuilding effort, and so that was kind of, I think, padding the decrease in such a way. At least 9 cement company stocks have surged in the last 2 days, with at least 5 going up nearly 21%. So we'll see what happens. Again, that is a very kind of sad situation going on over there. Let's see. I know last time I was on, we spoke about ChatGPT, Microsoft's kind of really heavy investment into it at 10 times their previous investment, going to $10 billion. So they are announcing that they are going to implement it. I think there's already a test for it, like kind of a beta on Bing and on Edge. What's interesting with these new guys, of course, I also spoke, Google's coming out with their Lambda-based Bard AI. What's great about these guys is this is not just your normal chatbot. This really is creation of content, which, you know, these chatbots had never really been possible of in the past. We're about to see these massive AI wars take off. I think personally, we will see. This is my bet that Google's Lambda is going to be a bit better than Microsoft's ChatGPT. But that is totally a guess on my part, just from the things that I've read. Guys, when we get back, we're going to get Teddy Keckstadt on the air, and we're going to get his opinion on the foreign exchange market.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
All right, guys, let's take a look over here, all right? This is the Tiger Forex Report by Teddy Keckstadt. This is a great newsletter. I read it every Monday before I publish it. I'm not that well versed in the Forex market, but still, the way that Teddy presents the information, it's succinct, it's informative. I really like it. Guys, this is, risk-free month subscription. If you don't like it, you're getting your money back. And while you're here, sign up for the Discord as well. That's $1 a year. Teddy, how you doing?
I'm doing great, Jacob. Good to see you.
Good to see you too. So let me know what's going on. What's happening today in the Forex or in the broader time frame as well?
Well, I'll tell you what, after last night's State of the Union address, I think the whole market is screwed up and doesn't know what to make of it. If things go the way he was talking last night, we could have a lot of reversals in a lot of markets. Right now, let's take the State of the Union off the table. I like that oil right now is holding kind of firm. I think that's going to bounce. I think the interest rates right now, you're looking at the 30-year and 10-year where they kind of basically butted up some nice resistance and came off it. I think they're going to keep on leaning lower, especially with the unemployment number that we had on Friday. And also you have the mainstream media now saying that, a recession is going to be completely avoided. It's not going to happen.
Mm-hmm.
Well, I guess according to numbers, in theory, we're not in one, even though we have been for 6 months already. If that is the case, well, that goes against the Fed's narrative. And I think that the interest rate hiking will not only just be for the next couple of meetings, but they're going to keep on hiking all the way into the summertime if that's truly the case. And that's going to help to bolster the dollar, I would think, versus most of the currency pairs. Which one would you like to talk about first?
Let's look at the dollar. I'm interested in the dollar's relationship with gold and how that moves, and we're also seeing some sideways movement right now. But in the past sessions, we've gotten some interesting movement. So I'd be a little bit interested to hear what your take on that on the long term. Okay.
Well, long term, I think that the dollar, at least if I'm right with what the Fed is probably going to do, especially because of the recent economic numbers and the way things, because remember, the Fed has been talking about for 6 months that they want a recession. So if we're not going into a technical, by definition, recession, they're going to keep on hammering rates. Now, they're not going to be as aggressive as they were last year, but I think that you can count on a quarter point being basically set into every meeting going forward for the next 6 to 8 months, unless we start to see an uptick in unemployment, and also we start to see some other things that point towards a true recession by economic definition. So that, I think, in general will help to keep the dollar strong. Now, there's certain currency crosses where I think you're going to have an issue, and that could be possibly, especially with the yen, just because that trend has been so strong over the past year and a half, and we have a rollover in the Bank of Japan's leadership coming up in a little over a month. And if once that does occur, if it turns out that our Fed comes off the hawkishness the way the media and everyone says it's going to happen over the next couple of months, well, that would make the dollar weak versus the yen. If it if the Japanese government or the BOJ, becomes more hawkish than what they're right now is expected, that also would bolster the yen versus the dollar. So in that currency cross, I think you could see dollar weakness, but overall, I think you're going to see dollar strength, especially in currencies versus like the euro and the pound and the Aussie dollar, especially as well.
Yeah, it's interesting you bring up the yen. I read a report with the Japan Times that they had intervened twice in October to support the yen. Mm-hmm. How does that kind of intervention affect these kind of, cross rates essentially? And I mean, does it help with confidence in trading it? What's your perspective on that?
Well, it does give you a sense of direction, some sort of confidence, especially at least in the short run. Now, when you're talking about the yen, now that's a big one because, the Japanese, you can kind of set your watch by what they do. They're very transparent and they don't just react very quickly. And especially when it comes towards what they've done currently, like in October and where they're leaning right now, this is a multi-decade change. They've been keeping negative interest rates, 0% interest rates in Japan for a very, very long time. So now when you think about that in a long-term perspective, that's not very supportive for their currency, but it has helped their exports for a very, very long time. Now, I think the one thing that the Japanese will be cautious with is that they will not become as aggressive per se as like how we were in the U.S. or even how the ECB is acting right now. And the biggest reason is because they're export reliant. Japan has certain imports. They're an island. There's certain things they need, but overall they're a net exporter. Okay, so their currency valuation is very touchy, and you don't just come off of zero and negative interest rates and just try and explode your interest rates. That serves no purpose whatsoever, especially because of their economic positioning. So I think you're going to see strength in the yen, but I would be very cautious if anyone says that they're going to be very aggressive when it comes to becoming hawkishness with that currency. And that's where Tommy and I have been talking about divergence in the currency markets. For COVID and during certain things, it was not that all markets trade in tandem on a daily basis, but the trends were in tandem. And now we're coming to a point where we have a big influx of variables where we're breaking that tandemness. So you're going to see the dollar index is going to be a hard gauge for a lot of currencies moving forward. But I would say with the dollar yen, that's what you really need to pay attention to is those couple of issues.
Right on. And I think the last pair I'm curious about, and again, I was talking about the geopolitical situation over there, would be, the dollar euro. I'm curious what your thought is going forward of the broader European economy itself with the kind of uncertainty that we're seeing.
Sure.
And kind of what your take is on that.
Okay, number one, the ECB will be more aggressive than our Fed. However, they're out of bullets. So where they did their half-point raise the last meeting, and they should be probably doing another half-point in the next meeting, I think that they're going to have to stall because they don't have the ability to keep doing what they're doing. First of all, the German economy, not to mention the whole EU, is suffering. You got to remember that we're 1 year into the Ukrainian conflict, and they said it was going to last 2 months. The sanctions that they've imposed haven't done anything but literally put a bomb off across the economy of the EU. So I think, just like where Americans are saying, hey, we have a debt ceiling. Why does the debt ceiling have to be raised? Why don't we just cut the funding to Ukraine? Why are we participating in this war? The whole EU, they're pretty much at that level, you have the highest rate of inflation in Germany since right before what touched off a world war and a whole political regime, And one thing I remember historically is that from that time period on, the German economy and the German people said we will never let high unemployment or high inflation ever happen in our country, no matter what. And it's becoming a very big issue because they're flipping the bill for the EU. So that means they're out of bullets. They cannot destroy their currency and their economy anymore. So they either have to lift the sanctions, and if they don't lift the sanctions and this conflict continues, the EU and the euro, they're going to suffer greatly. They're not right now. It looks very strong because of central bank action. They're not going to be able to maintain it, and especially if our Fed does not lay off. If the next meeting does not be if that's not their last hike, like the news has been saying it's going to be, guess what? That's going to hurt the euro very badly.
Interesting perspective. It definitely is in line with some of the increasing rhetoric from that area. Teddy, thank you so much for joining me. It was great seeing you.
You're welcome, Jacob. See you next week.
See you now. All right, folks, we will be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, folks, you know, that conversation at the end there with Teddy got me thinking. It's accurate a little bit what he's saying. You know, the Russian market obviously tanked very heavily at the beginning of the invasion and has, you know, not obviously been as robust for a while, but we are seeing a shifting and kind of, you know, the geopolitical arena again, as I said. You have kind of these larger, not larger, but developing economies, you know, with Iran, with a lot of the Gulf Arabs who are a bit more sympathetic to the existence of Russia and kind of, you know, their opposition in sense to the larger kind of Western hegemon. You know, for a while, one of the best ways that the Western world has been able to kind of keep, you know, other regimes, you know, to keep regimes in check has been kind of through that ability to depress their economy via sanctions and using the dollar. There has always been talk since, I mean, I can remember of these countries that have been on the opposite end of that, you know, Western policy of banding together to form some kind of their own currency. I remember there was even a crypto a while ago for some of the petrol countries. it'll be interesting to see. Russia clearly does have some staying power with what they're doing, and they're not hurting as badly. It is interesting. They had a big crash earlier. They're increasing basically the taxes, what you would call levies, in order to pay for the war. They are hurting with it, but they still have some more to kind of wring out of their people. So we'll see what happens with that. It's an interesting. It's been an interesting year and a half, I would say, guys. It has been wonderful to fill in for Tommy. I love doing this. Love reading you guys out what I find interesting today. Thank you for listening to me. We have Basil coming up next. Stay tuned. And after that, we have Steve Rhodes. Have a great day, guys.